everyone. I hope you're all well and having a great day wherever you're watching from. In today's video, we're going to take a deep, detailed, and long-term look at Applied Digital Corporation, trading under the ticker symbol APLD, and why this company continues to quietly position itself at the center of one of the most powerful and important secular trends in the global economy today: artificial intelligence infrastructure. This video is for educational and informational purposes only. Nothing discussed here should be considered financial advice. I am not a licensed financial advisor, and all opinions expressed are my own. Always do your own research and consult a qualified professional before making any investment decisions. Applied Digital Corporation is not the type of company that dominates headlines or trends daily on social media, and that is exactly why many investors continue to overlook it. While the majority of market participants are chasing flashy AI software names, consumer-facing applications, or short-term hype-driven trades, APLD is focused on building something far more foundational and far more critical to the long-term success of artificial intelligence as an industry. Applied Digital is building the physical backbone that makes large-scale AI possible in the first place. High-performance AI-focused data centers capable of handling massive compute workloads, power demands, cooling requirements, and specialized infrastructure that hyperscalers, cloud providers, and enterprise clients simply cannot operate without. Over the past several years, the company has been actively transitioning away from its earlier heavy exposure to crypto mining and instead pivoting aggressively toward enterprise-grade and AI-focused data center leasing, which is where the real, durable, long-term money is made. This is not a cosmetic shift. It is a fundamental business transformation that aligns APLD directly with the explosive growth in global AI demand. Several of Applied Digital's current and planned projects represent enormous capital investments, often in the range of $300 million to $500 million or more per facility. And management has been very clear about its ambitions to scale capacity toward hundreds of megawatts over the coming years. To put this into perspective, within the AI data center industry, just 1 megawatt of deployed capacity can generate roughly $8 million to $12 million in annual revenue, depending on contract structure, utilization, and customer mix. When you begin to scale that math, even a relatively conservative 100 megawatt build-out could translate into $800 million to well over $1 billion per year in potential revenue. This is exactly why APLD should not be viewed as a short-term trading vehicle, but rather as a multi-year infrastructure play that is directly tied to the accelerating demand for AI compute from hyperscalers, cloud providers, and large enterprise customers. The broader AI data center market itself is expected to expand into a $400 billion to $600 billion opportunity over the next decade, driven by companies like Microsoft, Amazon, Google, and OpenAI, all of which require unprecedented levels of power, cooling, and specialized facilities to support their AI ambitions. Despite this massive long-term opportunity, the market continues to undervalue Applied Digital, largely due to near-term execution costs, heavy capital expenditures, and temporary pressure on earnings and cash flow. These concerns, while valid in the short term, are extremely common during the early and middle stages of large-scale infrastructure build-outs. Historically speaking, some of the biggest returns in infrastructure and energy-adjacent investments are generated before the revenue fully materializes on the income statement, when sentiment is still skeptical and the market is focused on costs rather than future cash flows. If Applied Digital successfully executes on its expansion plans, secures long-term AI leasing contracts, and stabilizes its cash flow profile, today's valuation could look dramatically undervalued in hindsight. In a market that is obsessed with hype and short-term narratives, APLD represents the quieter, foundational side of the AI revolution, the kind of company that may not grab headlines today, but has the potential to deliver outsized returns as global AI demand continues to scale. From a technical and market structure standpoint, Applied Digital is also in a very strong position despite operating within a relatively weak and volatile broader market environment. Stock prices often regress back to former bull flags before attempting another major breakout, and APLD appears to be setting up for exactly that type of move. The big question right now is whether this developing structure is going to erupt to the upside as many bulls are expecting, or whether it could turn into a temporary trap that leads to lower price action in the medium term before the next major move. When we step back and look at the weekly time frame, the market structure remains clearly intact, with the stock continuing to set higher lows and higher highs. This is strong, healthy price behavior and does not require any kind of magical thinking to identify. Buyers have been consistently defending an ascending trendline that has effectively acted as an escalator higher for price over an extended period of time. At the same time, it is important to acknowledge areas of potential resistance and past price battles. Roughly a week and a half ago, price began forming what could be interpreted as a potential double top area, where buyers and sellers previously fought aggressively before sellers temporarily gained control and pushed price lower. Now, several months later, we are revisiting that same general zone, but with a key difference. The underlying divergence in structure looks significantly healthier than they did during the last attempt. In our prior analysis, we accurately anticipated a bounce around the $32 area, and price responded exactly as expected. Some traders may choose to label the broader structure as a cup and handle formation, with a downtrend transitioning into consolidation, followed by a strong upside move and a developing handle. While that interpretation is technically valid, personal trading preference matters, and not everyone prioritizes upside cup and handle structures as their primary signal. Zooming out even further, this price action represents a much larger trend shift. After a significant downtrend and breakdown near the $11 level, which we covered live at the time, buyers have gradually and methodically stepped in. This was closer to a textbook cup formation, even if it did not follow the pattern perfectly, and markets rarely do. What matters is the underlying tide shift on the daily time frame, where buyers have done an excellent job of slowly accumulating shares over time. As we move into current price action, APLD appears to be forming a well-defined bull flag. This structure was identified not too long ago when price was clearly setting up for a push toward the $30 to $33 range, and we saw a strong breakout attempt before broader market conditions caused a temporary pullback. Markets are inherently reactive, especially when major macro news, volatility spikes, or moves in assets like Bitcoin ripple across equities. That pullback does not invalidate the structure. Instead, price has now coiled back into the bull flag zone, setting up what could be one of the cleanest and most technically attractive structures we've seen in recent months. Rejections have been relatively brief, and pullbacks have been shallow, which suggests strong underlying demand. The $32.84 to $33 area remains the most critical support level on the chart. Historically, this zone has acted as a major battlefield, with heavy defense before a large drop from the $40 area down toward $20, followed by strong rejections and now multiple successful retests. We've seen nearly 8 days of sustained testing and defense at this level, which is impressive and signals conviction from buyers. What stands out the most is how well Applied Digital has held up despite broader market stress, increased volatility, and weakness in other sectors. Even as Bitcoin and other risk assets have experienced sharp moves, APLD has remained relatively strong, which is exactly what you want to see from a stock with institutional interest and long-term accumulation taking place. Stocks that can hold their ground during turbulent periods often outperform significantly when the market environment turns neutral or positive again. While the overall market has been choppy and challenging over the past few months, seasoned investors understand that these are often the conditions where long-term positions are built quietly, not when sentiment is euphoric. Looking ahead, it is entirely possible that APLD chops around or plays some short-term games if the broader market experiences additional volatility. However, over the next 5 to 10 trading days, the $40 level begins to look like a realistic prerequisite for the next phase of price action, assuming the current structure remains intact. I've been bullish on Applied Digital for quite some time now, and price action has continued to validate that stance. In fact, one could make a strong argument that this is the best APLD has looked since the time we were tracking it in the mid-teens. As always, it is critical